Today on the podcast, I sat down with Stephen Walbroehl, the co-founder and CTO of Halborn, the leading blockchain-focused cybersecurity firm. We're investors in Halborn, and I think Stephen's one of the sharpest technical minds in the industry. So I want to have him on to talk about the threat vectors that the industry is facing from a cybersecurity perspective. I think you'll enjoy this one. So without further ado, here's my conversation with Stephen from Halborn.
Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Well, Stephen, thank you for joining us today on the podcast. Excited to have you on. Definitely a very relevant time to be talking cybersecurity.
Oh, definitely. Yeah, I'm excited to be here. Thanks, Matt.
We're excited to be investors in Halborn, so I sort of know your origin story already, but maybe for those who are not familiar with you or Halborn, how'd you get into crypto? What was the path to starting this company?
Oh, yeah, no, definitely. So we've been around for almost 4 years now. And I have a long history in cybersecurity. I've been doing the hacking world for almost 20 years now and worked at a lot of big organizations in my history, like IBM and some financial companies. And in the cybersecurity world, you have red team, blue team. I was originally part of the blue team, but became pretty intrigued with what the red team, the offensive people were doing, the malicious hackers, because they always seemed like one step ahead of finding exploits and then we have to defend against them. So I started taking some certifications and studied learning to be a hacker. And that's when I found Bitcoin, because going on the dark nets to find hacker exploits and viruses and so on, ended up seeing, what is this thing that they're trading with called Buttcoin? No, this is Bitcoin. Oh, what is this thing? So then I really dug into it. They say like you go down the rabbit hole and look at the technical aspect of it. And I became fascinated with how it coded and the way it handles finance, peer-to-peer, read the white paper, completely like saw the future. I was like, oh man, this is going to be big later on, the tech itself. And then at IBM, ended up doing some smart contract audits because they started looking at things like WorldPay for Stellar, and I was auditing there. Then, because I was going down the rabbit hole, met Rob inside of a marketing channel on Slack for his previous token agency company back in 2016. And I was interested in seeing all the projects coming out from that. And one day Rob said, hey, does anybody know how to do these smart contract audits? One of my clients here is getting hacked and we don't know what to do. And it's like, I could try. I've done a couple of these things before. It's like, all right, let's meet and save the day. And then it happened again. Had tons of these projects that were just getting really like security issues like coming up all the time. And we decided to make a company called Token Hackers, which we decided was a terrible name very quickly. Then we called it Halborn. And since then, started off as just us two to a team of over 100 now. And we're still saving the world of cryptocurrency and blockchain today.
Well, you guys have a ton of products and services that I want to get into, but maybe before we do, so you've been in crypto for just a long time, and it obviously has a similar story to a lot of stories, mine included, where you sort of start with Bitcoin. How do you just ideologically think about the space and how it's evolved? I mean, I remember a world where everyone said, hey, everything's just going to be built on Bitcoin. And now I feel like the industry is so large, I can't even keep track of it. And it's my full-time job. How have you felt about the space over time?
Yeah, you're right. Everything's built on Bitcoin. It's like, there's no way we can do NFTs on Bitcoin. And then ordinals came out and like, oh man, like, okay, that's awesome. Great guys. But it's always innovating. That's what you notice from the very beginning is you don't expect something to happen. And then they make a use case for it and the development community starts building it, which is what I love as a tech person. There's a lot of innovation and it moves extremely fast. And that can be good or bad for security, the way you look at it. For us, because it's like a lot of great business, of course, for it. But for the development community, they take security very seriously because it can have bad impacts. So in general, my philosophy on the whole space started off as Bitcoin, which is just very simple, kind of a one-trick pony, right, of peer-to-peer systems, global currency based on just a trustless network. And I look at this almost as like the core layer, like a network type layer. And then you have, when Ethereum started coming in, that's where you open up a whole world of use cases with smart contracts, the concept of these Turing complete applications. Once that was there, really anything is possible, because if you could code it with logic, you could build it. And now we see games that are coming out on Web3. We see financial transactions that like lending and borrowing, exchanges, insurance protocols. So this is why they call it Web3, just like in the early versions of Web2, where you would have your simple websites that were run HTML or CSS, and then they evolved into these like fully dynamic marketplaces of like Amazon. And we're seeing that same evolution now in smart contracts, and starting off as simple tokens, now doing full-fledged metaverses that you can interact with. It's quite amazing. And, a lot of people's perceptions of it, one thing I like to talk about is people think that cryptocurrency and blockchain is just only finances and currency. And it could do a lot more than this with the use cases there. And me personally, I'll kind of end with this story, is I like to see all the use cases that really do improve or solve challenges or inefficiencies in the current technology and can revolutionize a lot of the, either whether it's productivity or value or transparency, using this technology here, which underpins all of it. So that's like my take on it all. I think it doesn't solve everything, but there's a lot of things it can do a lot better than what we have today.
One of the things I think a lot about as an investor when you look at the protocol side is just think about the bug bounty that's been on Bitcoin since it started. Think about how many people have been just trying to break this thing nonstop. I feel like whether you're technical or not, the first thing you do when you see Bitcoin is just try to find a way that it's not going to work. So if you're an economist, you're going to be just arguing about that. If you're technical, you're going to be trying to break it. And so there's a Lindy effect there because it's not broken. But these newer kind of Alt L1s and DeFi protocols, there's just frankly a lot fewer people spending time looking at them. So how do you think about the trade-offs in terms of people that are building apps and choosing which chain to build on?
Yeah, referencing what you first talked about, like trying to break Bitcoin, there's a lot of people approach it the wrong way, and they think that, quantum computing, I've always heard this before, like quantum computing will break, Bitcoin one day, it's unsafe. But if it breaks Bitcoin, it breaks the normal internet as well. And we have bigger problems than just Bitcoin.
Breaks all the banks, right?
Yeah, exactly. All the bags there. Yeah. Like TLS technology, like SSL, the little lock up on your browser, that's pretty much the same tech Bitcoin uses for public-private key anyway. So it would break that too. And they would just upgrade it, fork it to another one, because it's actually more secure. It's decentralized. So, it'll break Bitcoin, but, it's a resilient network. And this is the same true of these layer ones. If it's a truly decentralized network, then what you're doing is you are providing resiliency from availability, outages, or disturbances on the network. Now, a single wallet may be like compromised for a reason, but when we talk about the newer layer one generations, and like my take on the second part of this question you asked, we have things like Cosmos now, which are more like application-centric chains versus things like Ethereum, which are full, like a mainframe, it's like a world compute system that everybody shares, and even like layer two systems connect to it. So now we have these different types of chains that they're pulling some things from security to make it less secure, but also adding more security. So instead of a systemic event, like on a mainframe, where if there's an exploit, like if somebody breaks the Ethereum consensus, then all of Ethereum is going to suffer for that, rather than an application-specific chain, which is, a small, you could think of like a parachain or relay chain that is impacted and may not touch or affect other networks. So you're now dispersing the risk with that. So there's different flavors for it, and there's always going to be a security risk, and it's all about what do you do to mitigate it? And that's what we do at Halborn is we look at the whole ecosystem, everything in its entirety to provide security.
And so you guys are maybe shifting over to what you guys are actually doing at Halborn. It's a really fascinating company because you work with some of the largest financial firms in the world, but you also work with decentralized organizations. So maybe talk a little bit about the products and services and how they differ based on who the customer is.
Yeah, we kind of look at this convergence of services and the products that we deliver as our solutions, because they do work together. And then when we offer those solutions, we have the convergence of the TradFi, or the centralized finance, and the DeFi, the decentralized finance. So there's a convergence between that too, Web 2 and Web 3. We actually ran statistics on risks and exploits. And we found it's almost 50-50 of the root cause being between a Web3 security issue and a Web2 security issue. And that just really highlights like our thesis and approach of providing security solutions for both sides of it, because it could be an issue purely Web2 that has to do with blockchain, like a custody platform that you failed to secure, your login with the Active Directory, or you left your keys there, you didn't harden the server well enough and somebody got onto it. That's all nothing different from normal security that I've done for 20 years. And those issues can lead to Web3 issues. But then on the flip side, you can have Web3 pure issues where you don't know how to code Solidity for your smart contract. And now you're taking your bank and you're taking client payments or your transactions for swapping your loans, and your code is not secured. That's like a Web3 on-chain code flaw. So we have to look at everything holistically and the big picture, because if you scope that down to like a very small area, you're missing a lot of maybe the layers of the threat vectors that can really occur on the platform. So that's what we look at. It's all one big architecture that we've just prioritized based on risk and likelihood of something happening bad to your business.
Maybe going a little bit more into the TradFi first. I mean, you guys do a lot in the pen testing space. What are some of and I guess that's just an incredibly important space when you have digital bearer assets, right? I mean, this is unlike anything a lot of these organizations have ever dealt with, in the context that the money can just evaporate and it's not being held at the DTCC in the form of a security. What are some of the best practices that you're seeing from some of these, maybe not crypto native firms that are starting to do crypto things?
Yeah, best practices is be proactive. There's the concept of DevOps, where it's like the shift left security, where don't do it at the end. Like, okay, we built our product, we're ready to go live. Let's do a quick security check on it. Because one, that can lead to issues that just impact your delivery. You may find a fundamental flaw that you would have picked up earlier. And now you have to go back and burn capital and waste time and manpower to either redeploy it or just scrap it because you're like, it's too much of a risk now. So start earlier in your security. Do what I like to call preventative security instead of just reactive. And preventative is the pen testing. This is where you are looking for the issues before they happen and you're preventing them from happening later. So on the TradFi world, this would be like a firewall in front of your network. You're preventing malicious attackers from getting in, rather than a monitoring system, like intrusion detection system, where it's like, oh, the attackers are in here, they took the money, sound the alerts. It's like damage is done. So always look at having a full defense in depth, preventative and reactive, and then also like a recovery plan, disaster recovery. So this is all, the layers of different types of security have to be considered from the full stack of prevention, detection, and then recovery, and focusing on the risk, because you're never going to be 100% secure for anything. But first, classify and identify what are your mission critical processes or your assets. Where's the crown jewels that attackers would go after, and start there, and work with a company like Halborn, or if you have a security team, to do threat assessment. Find out, okay, well, these are the mission critical assets and processes. What can we do, or how can we get to them, or what would be a likely scenario that they would be compromised? And then build tools or implement tools or processes, or get a team to mitigate those areas. And that's always how you structure. And you just do that until you feel like you've gotten to a level of risk that you're okay. Everybody has different risk appetites. Banks and financial institutions usually have a very low risk appetite. So they'll put lots of different layers of controls around that. And then that's just technical risk. Then there's the whole world of like compliance and regulatory risk as well, where, hey, we do all this really great and we've hardened everything and no hacker can ever get in. And then a law gets passed saying you can't do it anyways.
Right.
So,
right.
Yeah, that's the risk. We don't really do too much of that. Like, we can advise towards it, but we don't do the auditing for the government entities or anything for them. But that's more like privacy compliance.
Yeah. And I guess it's, it's probably going well, not only for you, but maybe others in the industry, because I feel like you see fewer of these kind of crypto native startups where it's, hey, we actually just lost our entire balance sheet because there was some exploit where our CEO's email got taken over. And like, you remember those would happen in 2015 and 16.
Yeah. Now the algorithmic stablecoin had some issues and like, oh, everything is zero now.
Right. Exactly. Well, I guess that's a good dovetail over to the DeFi side. I mean, I'm continually just shocked at how much capital is put into some of these platforms that are, we later find out, are just really not built appropriately. Maybe speak a little bit about that and just what that's like right now in the DeFi space.
Yeah, in the DeFi space, you touched upon something interesting, Matt, with the way you can have a whole balance sheet like evaporate because of a key being lost. Because in the normal security world, the normal finance world, those type of issues happen. You have backstops and you could reverse things, or you can go after the criminals. And even the criminals, when they try to break things or steal funds from that, they have to go through different types of steps. They have to phish people and then steal credit cards out there. You're not gonna like go and into the server at Bank of America, Wells Fargo, and like take the money out of the server or anything, because it's a digital representation of, like, I guess, cash that's doesn't work on a smart contract. It's not like a consensus token or some type of like blockchain native asset. So you have a whole different approach on what is at risk with this. You can steal something on chain and transfer it, and it's anonymous. There's the whole forensic part of it is different. So in the DeFi world, that's where the risk is different and what can happen, because you have the actual asset of value is sitting there inside of a wallet or a vault. And then you'll have these bridges and derivatives assets around it. So, there's the assets at risk from code flaws that can be, if you find an exploit or you find some type of logical component that doesn't work, then anybody can exploit that if they know the code well enough, because it's all permissionless, transparent network. And that's why it's always being attacked and looked at, and happens extremely fast. You don't get that level of transparency from like the security flaw side on traditional finance either, unless a bank's like a code is on GitHub open source for people, which you're not going to see that type of stuff. So there's like these logical issues in the code. And then there's the financial aspect of it all, where you're now able to do a lot of attacks like flash loans. And the algorithmic stablecoin I mentioned earlier it's using arbitrage between like two tokens in order to have balance based on supply and the price differences. But if there's not enough liquidity there, it's not like a US Treasury where there's like almost unlimited liquidity. There's not enough there to support it, then that can be leveraged as an attack. You can do for example, a flash loan, you can borrow enough tokens without collateral to manipulate the price. So I don't think anybody could really do that except a handful of people. And there's laws against that in traditional equities, right? Buy a bunch of Tesla to like short Tesla. I don't know. So that's different too. There's different types of methods that are exposed in this ecosystem. It's quite fascinating to see that.
Yeah, as you point out, it's way more than just pure cybersecurity, right? I'm thinking about the Mango Markets hack, where I guess you wouldn't even call it a hack. It's really a market manipulation. And, I guess that guy is in jail at this point, and there is a CFTC process. It'll be interesting to see what the legal side of that looks like.
He's following the rules, right? Yeah, he saw the code says I could do this, right?
And that would certainly be his argument. But I wonder if we need to get to a point where there's some sort of an automatic alert to just shut down a pool or something like that. How do you think we can build systems to be more resilient here?
For sure. This is a great topic to talk about, like stuff that Halborn is doing. We see a lot of these threats as well. And it's difficult to walk the line between, okay, this is decentralized. We don't want to like centralize it by putting restrictions like Halborn says no, or some security person says no, like censor that or stop that. Because then it's like go back to just traditional finances we have already. But there's also the risk factor, and we have to protect these funds if we want to see it succeed. So how do you walk that line? And right now, a lot of the only tools that we've encountered there are like multi-signature wallets where two signers have to authorize something. But then how do I know these two signers aren't just the same person, or they're working together to do? So we've developed a tool called Seraph. We have 5 patents on it, and it's a notary solution that lives on an EVM chain. So it's pretty much a smart contract or set of smart contracts that enable only specific functions, like critical functions, like a withdrawal liquidity, like take all the funds out, or upgrade the owner to somebody else, like an escalate of privilege. these are functions in these codes of the smart contract that are extremely sensitive and critical, and the ones that would normally be hacked. So we could protect only those and kind of predetermine what is the expected use for this. If this function gets called, why is it getting called? There's a set of rules, it's kind of like a firewall, like, you have firewall rules. And if any of those rules are not being met, let's say we never want to withdraw the funds out of this treasury in the excess of $1 million unless, there's a DAO vote that occurred there. And if we see any issues on the rule, then what Seraph will do, it's a wrapper around that function to drop the transaction. And it does this all on chain. So it's kind of like a transparent, it's non-custodial. It's using the sense of a notary to either notarize, like sign off, like this transaction is what we're expecting it to do, or reject it. And if it gets rejected, then it's an on-chain rejection. We're not co-signing, there's no keys with it. And anybody can be a notary. It's not just Halborn. So what's great about that, imagine you, Matt, as an investor, and you've invested in a protocol of a smart contract. You just gave them $100 million and it's inside the liquidity pool to help them, distribute the rewards. You're like, I kind of want to make sure that's okay, right? I don't want those funds to get hacked. You could be the notary for any treasury withdrawal. And with that notary, you can have you or your team with that key and say, hey, we need to, take this money out here to deploy it for some new contract developers we want to hire. And you would say, okay, yeah, that's a good use of funds. And then you can notarize that transaction to happen. So you're not blocking it. It's not centralized. You're not saying yes, no to everything they're doing. You're just protecting, on agreed upon use of that function of the withdrawal treasury. And if they do get hacked or lose the keys, you'll be like, wait, hey guys, are you trying to take out everything right now? It's like, no. It's like, oh, reject. Let's go see what's going on and then figure it out. So it's really awesome protection, I think, that is still in the spirit of decentralization.
I think it's a super vital service. It seems like that's the type of thing that every public protocol really ought to have there, as the space moves forward. Not having it, we've seen what happens. I guess lately it's been interesting. Some of these hacks, you've actually seen the return of funds, which it's hard to tell. I'm curious your perspective. Is that because they get doxed some way and they're sending back the funds typically? Why would attackers be sending back money at this point?
So it depends on the attacker. I've seen the normal hacker mindset, which I'm very, very empathetic to, is a lot of them want to just show the world that they can do it. They're like, look how elite I am. I hacked your protocol. Look at me. Blah, blah. Okay, here's your money back. I just wanted to get attention, I guess. But in the other ways, if somebody's truly trying to just get financial gain from it, which I'm sure the majority of them are, it's like off ramps. Tornado Cash for Ethereum is the biggest one. It's like, okay, where do I get this out now? Black market or sell it? And then they just realize that it's not quite as easy as they can, especially when you have things like USDC or USDT or these stable coins. They have in their code freeze and burn, and they can stop those funds. And then Tornado Cash is really one of the things. Even OFAC is involved with that too, and the wallets that touch that. So there's a lot of on-chain functional controls there. And then of course the doxing part of it all. This goes back to that Web 2, Web 3 mix that we were discussing before. You can have complete anonymity with your keys and your wallet, but if you've registered at an exchange, then they're going to know who owns that wallet, you've KYC'd, or maybe you didn't even do that, but your wallet is tied to another address that address, you've posted it on Twitter or something there. Now you have an identity tied to that address. So there's always a real world pin that you could possibly accidentally expose. And once you have one, that's all you need. Then you can just start investigating and find them.
It's an immutable ledger of all the crimes you've done, which is why it's fascinating to see the Bitfinex hackers and one of the Mt. Gox hackers. You catch these people and they have billions of dollars on hardware wallets, but they can't actually spend it. It's a really perverse type of thing. It must be very difficult as a hacker to live in that world.
Yeah, exactly. Everybody's watching your wallet too, and the whole world can watch it if they want to. You can even talk to them on Ethereum. You could send transactions with messages, like the Poly Network hacker guy did. He was saying all right, CoinDesk, let's do this interview live on chain. It's fascinating. I love it. It's makes my job fun. But yeah, you're right. When a lot of regulators and law enforcement, they weren't familiar with it several years ago, how it actually worked. And now that they see oh, actually, this is way easier to find the money than just cash in a suitcase that goes over the border.
Yeah, there's an argument there that, a lot of politicians would like to have you believe that crypto is just all nefarious people, but it's actually pretty difficult. And maybe you wouldn't be the smartest criminal in the world if you're doing your crimes on chain, is my argument.
Yeah, and the ones that do it right, they're usually really technical. Like they know how to do coin join and swaps, and if they're doing Ethereum, how to use all these DeFi protocols to add liquidity pools, take it out, go to Tornado Cash, do a cross-chain bridge from one to another on like something like Raven Coin or something, and then back. So it's kind of like watching funds with technical contracts.
And I guess that sort of dovetails into the nation state level here. So obviously North Korea has been pretty active on the scene. Has that always been the case where you've had nation state actors in this industry?
Yeah, the terminology in the security world is called APT, Advanced Persistent Threat. And that's always the case. There's usually 3 types of security threats. And one of them is like hacktivists, which are people they don't really care too much about like financial gain. They just want to send their message or like their political ideals or whatever, their hacktivism. Then you just have the normal adversaries that the ones that stealing funds or causing disruption. And then you have the nation state, and that's usually very targeted, almost like spear phishing in a way. They have a target in mind. They have a specific thing that they're working towards that is for their nation, cyber terrorism essentially. And we've seen that in the traditional world of things like Stuxnet, if you're familiar with that. Yeah, so Stuxnet is one of the most famous ones of having a custom virus, like 5-layer virus, tailored and coded specifically for like one use case on nuclear centrifuges inside of Iran on their like non-Windows motherboards to exploit that and cause disruptions. Like that's nation state kind of research and developers and a team to figure out, and they're funded to make custom exploits or attacks for a purpose. And that's what we see traditionally, and we can even see that here, I think, behind the scenes on high level DeFi. But the government hasn't gotten to the point of like full adoption. I could foresee a future where if we're using DeFi in normal commercial financial services or government services like CBDCs, where now you have nation state actors researching and developing code to like exploit whatever the Fed coin, their contract is, disrupt their financial. So I think from a security standpoint here, it's going to get even more serious in the future. Like security is going to be top of mind in the future, even more than it is now for this whole like DeFi and blockchain and smart contract world.
Yeah, you bring up an interesting point on stablecoins and CBDCs. I mean, obviously a stablecoin kind of has to live on a public chain. The interoperability with DeFi is a big part of the value proposition. The good part there, though, is that the collateral is technically offline, right? So if you're dealing with a USDC, they have the QSIPs, the underlying collaterals at Bank of New York Mellon. So, there's some degree of protection, I guess, just in the way it's built. With a CBDC, I just wonder if you even need a blockchain. I don't know if you have a view on that.
Right. Yeah. You're tokenizing an asset. Like there's the whole like triad. I think Vitalik from Ethereum talked about like you're balancing scalability, security, and decentralization. That's like the triangle of it. And so what they're using for that is taking away decentralization more to add scalability. Right? And I wouldn't say it's any more transparent than what we would see like on Ethereum, but now they are being able to see their digital assets that are tokenized with collateral offline or in the Federal Reserve Bank's like ledger or something of matching that token. And so you're not doing it there because it's a scarce asset like Bitcoin that you have to mine. You're doing it so that you can track, monitor transactions, make it faster, scale it. And I guess you depending on how it's coded, provide more security for the stability of the assets that are being used. So that's, again, it's like there's another purpose for blockchain. You're getting the values from Swift systems very slow. And if I want to wire transfer to you on like Friday afternoon, it's like, all right, let me know if you get it like Monday afternoon. So it'd be pretty cool to have that happen really quickly for everybody and do that securely. So there's a use case right there, a transparent way you verify with your friend for that and use the code to know that he has the funds in his wallet. I mean, there's a lot, again, back to the benefits of the technology. Not everything needs to be a volatile asset that's like not backed by real collateral. Let's just use the tech. It's better.
Totally. I mean, one of the things I'm very bullish on the longer term, there's obviously some regulatory issues with what I'm about to say, but you can imagine a world where a bunch of real world assets get tokenized on blockchains, and maybe you own shares in a REIT that trades, on a public blockchain. And let's say you want a loan. Let's say that you need to buy a car. You could go through the TradFi kind of non-blockchain way of getting a margin loan from your broker or going to get a HELOC, but that's going to take weeks. Why wouldn't you just want to plug it into DeFi and park your collateral, your REIT shares, and you get stablecoins back in 60 seconds? I mean,
yeah, you speed of buying a house too. You can have money in escrow here. You can have a lender broker here, and like the whole underwriter process. And the lender can have their own rules that are executed against like the user's credit score contract or something. So like happen instantaneously, like at the speed of blockchain.
And I guess, in that world, you just need to be sure that the pool is safe, right? So to your earlier point, you probably need to have some sort of a notarization mechanism or some sort of a public review on this for any of these financial firms to get comfortable extending credit in that environment.
100%. Yeah, this product that like Seraph and the patents for it, I personally think we're early to the market with it because it solves a lot. And for enterprise adoption, let's just say you are a bank that giving lending and borrowing, you could use this as an enterprise solution within your company and have one notary be the underwriter to approve it. And you can have the borrower or like maybe the mortgage team, they're sending in like loan requests to them on chain, their permission to chain or whatever they want to do it. And the notary will see all the contract transactions come in, it'll be populated on their app. And then they say, yeah, this one's approved because we see the collateral here. We see the history of transactions. We know that they're high credit. It's not like a new wallet. We've never seen their transactions before. They have enough there, time lock there for a certain loan. It's like, all right, approve. And then it confirms the transaction. And then the funds get automatically released so Seraph can be not just a security prevention, it could be a platform for a ticketing system, approval system in a way between two different entities. I mean, that's another use case for it that we can see. It just has to be adopted first. It has to get to that point of, doing business on that platform.
Yeah, I definitely think that's the way it's going. One of the things that's been fascinating over the past few months here is that you guys identified a 0-day vulnerability that impacted 280 different networks, including Dogecoin. So it's good timing with Elon putting the Dogecoin logo on Twitter. But talk a little bit, this was called Rabies. This was the code name for this vulnerability. So maybe talk a little bit about what happened here.
Yeah, for sure. So timely release for it, but this is actually something that we found quite some time ago. So we were doing an audit of Dogecoin. And I know that sounds kind of strange because it's like a public code on GitHub that everybody can see. And it is kind of decentralized. It's like just run by the maintainers of Dogecoin and some key devs. But we were auditing it on behalf of a client because they were going to set up some Dogecoin miners on there. And when we were going through it, one of our top engineers, Hassam here at Halborn, he had found several different critical issues on the mainnet Dogecoin, and three of them affected the peer-to-peer consensus. So there's like an out-of-memory vulnerability where if you knew where a Dogecoin miner was, you could send them consensus command and they would just run out of memory and shut down. So you could attack the entire mainnet of Dogecoin at once. And then there was another vulnerability we saw, remote code execution, to just really get control of the system externally from it and then get on their wallet. These are extremely critical because in the wrong hands, it could bring down Dogecoin, and nobody wants that, especially Elon. It's like, I thought Dogecoin was going to the moon, not into the grave. So that's the type of thing where we see that, and it's very tricky in order to protect that or fix that, because there's this concept that adversaries use where they will look at updates or patches to the code, especially when it's open source. And when they say, why did they patch that? What's going on? And then they compare the previous to that. And then it kind of like shows them like, oh, they fixed this. And then there's time, like, because it's decentralized, all the people that are running Dogecoin nodes or miners, they need to update to the latest patch, just like Windows and Mac that we see. So there's a window of time where the network is vulnerable. And now we've just kind of like shown what's going on, like, what got patched. So we were working with Patrick, one of the key developers. He confirmed the issues. He was like, oh man, thanks for finding this. And like pull that into other normal releases, kind of like sleuth in there, like some of the patches over time. Nobody really saw that, luckily, because it's been there for several years. And then they all got upgraded eventually to being past that 51% point where the network is still going to be, not at risk anymore. during that time, we also said, well, Dogecoin is a fork of Bitcoin. Let's check Bitcoin. Okay, Bitcoin's good. Whew, thank God. and then we checked all of the other like the UTXO based protocol, like proof of work pretty much, and found Litecoin was vulnerable and Zcash and 200 other like smaller ones. So the whole value at stake with this type of issue was like literally in the multi-billions. We're like, oh my God, this is huge. What do we do? So it's a big risk. So we had to keep everybody to, get everybody together from the different decentralized networks. That was hard enough, just rallying them all together. Showed it to them. And, a lot of them, they know who Halborn is. We have a really high reputation in the industry. So we were able to get the main projects patched. They looked at Dogecoin. They helped out to get the code in there until they all caught up to be secured. And then we released the disclosure, after all of that. It was quite a ride.
That's fascinating. I mean, there has to be some of these teams where it's just hard to get in touch with people. It must be a scramble to try to actually find who to talk to on chain number 154 or whatever.
Yeah, for sure, Matt. We didn't see some projects, like when they weren't there, we couldn't get in touch with them. But this is like how security disclosures often work. The smaller project will sometimes just be like almost like forced into it. It's like, oh man, everybody's patched except for me. Now I have to go get it done. It's actually a risk to wait for everybody to do it. Sometimes you have to be, hey guys, this is the drop dead date. And then we're disclosing it. So, keep up or get hacked. And it's like Apple phones. Apple doesn't wait till everybody updates their iPhone until they announce the release. They're like, hey guys, there's a vulnerability. Update your iPhone. It's critical. Now go ahead.
Yeah. So this is an interesting one because it's a UTXO chain. What does this look like on like an EVM chain? I'm curious, or a modular blockchain even. Do you think that the systemic issues get to the point where eventually you're going to have exploits that impact thousands of different protocols or, maybe L2s, L3s?
Mm-hmm. Yeah. Well, I'm not going to say that it can't happen. And we've seen it before on some big chains, and we've protected those big chains, which is why people come to us for the hard stuff. Like Solana, for example, we work on their layer 1 and many other layer 1s. And all depends on the platform itself. Like Bitcoin, Dogecoin, Solana, they're all running one layer, essentially. They have their consensus protocol, and the UTXO is the distribution of funds through the blocks. And Solana is a delegated proof of stake, but it's the consensus, like the communication of the traffic and like the program executions are happening on the same exact network. EVM is different because you have the smart contract layer that's executing all of the apps, and then you have the consensus layer, the EVM code of keeping the nodes in sync and the distribution of the ledger. Those are two different areas. So smart contract hacks will never really impact the systemic consensus layer on EVM, but there can be some EVM-based consensus issues. There's a lot of different runtimes, though, for EVM. Like there's Rust and Parity and Lighthouse and Go or Geth. So there's various flavors of it. And I think if the network's robust enough and diverse enough for the platforms of people doing the consensus, you're going to reduce the risk rather than everybody running the same exact version of the same exact binary of the same exact language. That means if there's one risk there, they're all impacted the same exact vulnerability. So you can see there's different types of mitigation factors depending on which chain you're talking about. So I think EVM is safe because of that diversification aspect of the code they're running there.
That's interesting. Yeah. Protection through decentralization in that case, I guess. Yeah.
Exactly. Yeah. You want a security job, Matt? It's like, you get it.
Yeah, I get it. I feel like I could go sell it. I definitely couldn't build it.
Yeah. That's one aspect. And then the other one is like security through obscurity.
Yeah. That makes a ton of sense. Well, this is great, Stephen. Where can we send people, whether they're at a TradFi institution or a decentralized organization, where can we send them to learn more about what you guys are doing?
Yeah. So halborn.com is always one of the best sources. Our website has everything that we just spoke about with the rabies vulnerability, the MetaMask 0 day that we found, some language calls. We have blogs that are put up almost every day about, different hacks and going into them, technical perspective. All the services that we offer are there as well. And then we have always interact with us on Twitter. We're pretty active there and on LinkedIn. And we have a way that if you're interested in knowing, hey, do you guys do this? Or you're an institution that needs a product or service solution, our emails are on there. We have a contact on there. We can respond to your solutions engineering and sales team are very well adapted to be able to hear and see what the problems are. And we can't do everything for sure. And we have a lot of partners that can help you that we can recommend you to. But we do a lot. And Halborn takes pride in being really white glove, and particular, like we actually enjoy making almost bespoke security programs and solutions for the clients here. And I think that's a sweet spot. And with our ability to know how to secure the Web 2 world and the Web 3 world, the TradFi and the DeFi, we're pretty well apt to hopefully get somebody secure that's interested.
Well, you guys are doing a great job. There's definitely never a dull moment in what you guys are doing. So I appreciate you coming on the podcast and spending a few minutes telling us about it.
No problem. Yeah, I enjoyed it. I can talk about this for days, and yeah, never dull moment. I love every minute of it. And I love the fact that what we do here is we're helping this whole new ecosystem and this new technology to find its place in the world.
Awesome. Thanks, Stephen. Thanks for listening to another episode of On the Brink with Castle Island. To find out more about Castle Island, visit castleisland.vc. To listen to all of our podcast episodes, please go to onthebrink-podcast.com or just click on the tab in our website. Thanks for listening.